Partnered by Times Influence.
NSE Prosperous India, an investor education initiative, showcases the importance and benefits that arise from investing in India's promising equity markets. Having traversed across 12 cities, we bring to you a 4-part special series where market experts interact with members across age groups to understand their financial goals and help them tread on the path to financial prosperity.
Hello and welcome to this special edition of NSE Prosperous India, a unique investor education initiative brought to you by the National Stock Exchange of India and Times Network. Now, we've been traversing the country, meeting investors all across and talking to them about how they can be a part of growing India and participate in the financial growth of India's economy. And now we're doing a very special series where we're going to meet individuals across different age groups and talk to them one-on-one, find out from them what's on their mind, what are some of their financial goals, and get them to meet our very best personal finance experts who will guide them on the way ahead. So on this first episode, we're meeting some young students who, well, are still studying, but it's always important to start investing and start planning your finances at an early age. To help me on this, I have with me Hemant Rustagi. He's the CEO at Wise Invest Advisors. Thanks, Hemant, for coming in. And our two special guests, both are college students. First up, we have Caroline from Wilson College. Hi, Caroline. Thank you for coming. And we have Lata, who's at the School of Broadcasting and Communication. Thank you, Lata, for coming in. Hemant, first question to you is, they're both college-going students. They're in their early 20s. Why do we need to talk to them about finance, planning, investments, savings?
No, I think you're absolutely right, Sumit. I think this is what everyone thinks. But I think there are certain important aspects that we all need to understand. When we talk about money, money is something you learn to earn and also learn how to invest. So in the process, what happens in the family? We are told right from the childhood that you should be buying real estate, you should be buying gold, and don't buy anything else or go into fixed deposits. So I think there are a lot of things that we carry with us. So I think this is the right stage to maybe unlearn some of it and learn new things.
Yeah, you're right, totally right on that, because it's really important to get into a discipline. What's your advice? Like, what would be the first step that you would advise someone when they want to start off on the financial journey?
I think there are two important aspects that everyone needs to look at, especially at the early stage of life. One is to start saving. Yeah. Okay, so I think that brings in some discipline that, okay, if I'm earning X amount, 30% of that I'm going to be saving and 70% I can spend. So, the important thing is, many a times the youngsters think that if I need to save at this stage, what is this? I've worked so hard, I've come to this stage, just now started earning, why is somebody asking me to start investing? The best thing is, if you save, let's say 20-30% of your income, you still have 70% to enjoy your life. So I don't think you need to really worry about whether you can enjoy or not. You can enjoy. And once you get into the discipline of saving, then the next process of investment begins. And that's the difference that every youngster needs to understand at that stage. Many a times we think that I put the money in the bank, so I become an investor. You have not become an investor, you just become a saver. Right. You become an investor when you actually start investing purposely in the goals or in the investment options where you can actually earn money. Right. So for example, basic things to remember, when you're investing for something long term, there is a risk perception that we have. The risk is that I don't want to lose a part of my money. Yeah, of course. That's one risk, very, very important risk, but that applies to only when you're applying for the short term. The bigger risk is risk of inflation, that the rising cost will eat into your money.
Superb. So let's start talking to both Caroline and Lata. So Caroline, first, what's on your mind? What are some financial goals that you have for yourself?
I'm waiting for my third year to get done, and then I'm planning to go abroad. So my parents luckily are there to support me financially, and for my course that I want to apply for, it is for per semester, or you can say for a year, it is summing up to almost 60 lakhs. That is Indian money, of course. So my parents want to support me, but I don't really want to liquidify their assets, because it's really difficult. They've earned their entire life to make that money. So I was inching towards taking a loan, but also when you take a loan, how many years am I going to put in to just finish that loan up? When how much time is it going to take for me to actually settle down?
What are the pros and the cons of taking an educational loan? Hemant, your thoughts?
there is a facility that of taking education loan. You can take it since you will be going abroad. So 2-3 important things you need to remember. You talked about tuition fee of 1.2 crore for 2 years. You need to consider all the costs, the hostel expenses and lodging, whatever, all the expenses are there. It's easy to get a loan. The banks are willing to give loan, but there are certain aspects that you need to understand. That I think when you go abroad, the maximum I think you can get is around 1.5 crore, and you will get it for around 15 years. Okay, so one thing is that, so which clearly means that some of the money has to come from somewhere. And you don't have that money right now, so you will have to necessarily go back to your family. And well, if you still want that everything has to be done by yourself, you can repay them later. But it's important that you take help today, okay, because there is going to be some money that which has to be contributed. That is, if the bank agrees to give you 1.5 crore. If they give you less, then obviously that much more money has to be given. Okay, so that's very important. Second thing is, when you go to the bank, find out whether the university that you want to go is acknowledged by them. It should be in their list where they are willing to give loan, because there are certain criteria that they have in terms of reputation and what are the probability of students getting job thereafter. So there are certain factors they look at. So find out about that. Third is, because your loan is going to be large amount, there has to be someone as a co-applicant, which your father or mother can be a co-applicant, and there has to be a collateral. And since you said that your family has property, so that can be done. Okay, and so you broadly have a period of around 15 years to repay. Important point that you raise is how much time is going to take me. So if, let's say, the rate of interest is 10-11%, okay, and they will give you certain period of moratorium where maybe you don't pay immediately after getting a job, but that gets added to your EMI later on. So there is certain flexibility, but like I said, you need to work out your maths well.
Okay. Superb, great. Lata, let's hear from you. What's something on your mind, a financial goal? What's on your mind?
I want to be a journalist, a travel journalist, and I'm into this field already. And my only and one and only question is, sir, that when we talk about the income, firstly we think about the needs. And when it's about the needs, we need to fulfill our needs first, and then we have to think about the savings. So I'm just asking question in the perspective from a student who is a common student, and the student's family belongs to a very simple, and their goals are just to have a house or gold, as sir said, real estate and all. So when should we think about the savings?
That's a very valid point, Hemant, and I'm sure others also have this point that, coming back to that if my income is so less and my expenses, from that income I'm paying out my expenses, therefore there's nothing left to save or invest. So how do you want to guide her?
Look, I understand where you're coming from, but let's be very clear here. Look, there can be certain limitation in terms of what you earn at the start of your career. Maybe your income can grow over a period of time. The issue, then the decision that has to be taken is whether I should ignore investment completely at this stage, okay, and focus only on my expenses. There is something called budgeting. Not many of us actually sit down and do that. When you start doing budgeting, you realize that there are certain expenses I can actually avoid, okay, and it really happens. Get into the discipline of when you start earning, see how much are your expenses going to be. Plan those expenses. You cannot have that, okay, I'm getting X money and you don't know how much you're going to spend. So typically what will happen is by 20th you'll say you have no money left and you don't know what to do for the next 10 days. To avoid a situation, work out a budget, see how much your expenses are. And you'll be surprised to see that you'll see, okay, certain expenses I can avoid. So maybe there'll be some scope for investment. And if indeed you have to think about investment, it has to be done before you commit to spend. It cannot be that, okay, let me see how much I spend and what is left is I'll start investing. No, you need to first commit your investment. How much do you invest? I'm not even saying that you can take care of all the goals. Okay, you need to, we discussed that earlier, you need to get into the habit of saving some money. It could be even 10%. It doesn't matter. Make it a habit, get into the discipline. And then as you start seeing that money accumulating, you'll see how it works for you. It'll encourage you to maybe start saving more. Coming back to the goal or coming back to the requirement, that's what financial goals are. It can be any goal. It can be any goal. The thing is, you need to plan. Like everything else, you guys have worked out your career very well. You know what you want to, both of you know what you want to be. Yeah. The same thing applies for even investment. There has to be an investment plan, like everything else in life. What is an investment plan? You need to list out your goals. Okay. Now, when you work out this list, you will find there's going to be a bucket list in that. Okay. There's going to be to-do list. Right. Look at all the items and then see what is more important for me. Like you said, suppose you want to do something for your parents and you build a house for them. That becomes your goal. Remember one thing, it's an important goal. It will require you large money, which means that you need to start investing as soon as you start earning money. The more you delay, there is something that you must know this. The delay can cost you a lot. Okay, now for example, if I invest some money, let's say I invest 10,000 rupees for next 20 years. Okay, I can build a corpus of around 1 crore. I delay that by 10 years, I will have to invest 30,000 rupees to get there. So every 10-year delay is going to cost you, have to invest 3 times more. So please understand that don't delay that. Whatever money, and there are options today. There are options today where you can invest as much as 500 rupees or 1,000 rupees. Don't be under the impression that unless I have big money, I can't start investing. You can start investing even with a small sum. So get into the habit, list out your goals, get your priorities right, find out how much that house will cost you, okay, and work backward and see how much money I need to invest. There may be a gap, it doesn't matter. Start investing as soon as you earn. Maybe as your income becomes higher, start adding more money to that. But start the process. Starting is absolutely necessary. And as I said, work out your budget. You will be surprised to see that there will be a scope to invest as well as to spend.
Okay, as far as I have known the students of my age, they firstly think about the savings, but I am for the first time hearing about the investment which we have to do when we earn. So what kind of investment are you talking about? Just tell me.
See, like I said earlier, saving is putting money in the bank. Okay, the bank will give me 6-7% interest on putting FD, right? In India, the long-term inflation is around 7%. So you know what happens there? I talked about risk, the risk of losing capital and the risk of inflation, which means that your money is lying in the bank. It's growing in numbers because every year is adding 6% or 7%, but the inflation is taking away all of that. Plus the interest that you get is taxable. So at the end of the day, you actually see the value of your money going down, not going up. That's the difference. So you begin with saving. Maybe you put your money in the bank, but look for options. Okay, as far as options are concerned, mutual funds. Have you heard about mutual funds? Mutual funds are a great investment vehicle. Okay, they're not a product by themselves. They're actually an investment vehicle. They allow you to invest in different markets. Now, what are the markets we're talking about? We're talking about debt market. We're talking about equity market. The perception that we have for equity market is always very risky, so I don't want to go anywhere near. But if you want to build wealth, equity market is something that will help you. And the reason why you need to start investing early, because you need to understand how equity works. There is going to be up and down. You need to be comfortable with that. And that risk you can take with a smaller sum of money that you have. Once you understand the nuances, when you have serious money at some stage in your life, you are much more confident about doing it. So look beyond gold, look beyond fixed deposit, look at market linked products offered by mutual funds. Okay, look at mix of equity and debt, build your portfolio, understand how market linked products are working, and then because that is what will help you beat inflation. So for example, if you put money in an equity fund for next 10-15 years, let's say your goal is to build a house after 10 years, let's say, the FD is not going to get you there. Okay, so your money has to grow at a higher rate than inflation, which is what an equity fund can do for you. But equity is going to test your patience and perseverance. Okay, how do you learn that? You learn when you start investing. You can't be sitting outside and learning something. You be in it to understand how it is. So it's important, irrespective of whatever money you have, start the process.
So the important thing is also a little bit of research on yourselves. Like when you did your course, when you researching for this course abroad, when you must have done a lot of research, looked at different colleges before deciding the college. It's similar to that. It's just about educating yourself to learn about it.
If you're talking about investment at this age and at this time, is there anything else apart from mutual funds? Is there any other source of investment?
I think that's a very important question. Before you talk about options, let's understand which asset classes you can invest in. We did talk about at home. Everyone tells us invest in real estate, buy a house, buy gold, fixed deposit. These are all asset classes. Okay, so you have physical assets, you have financial assets. First, we need to understand the concept of asset allocation. Okay, so that means where your money should be invested. Okay, now for example, we talked about if you want to build a corpus over a longer period, Okay, one of the options that we have is, okay, let me do one thing, let me buy a real estate. I will build an asset and also start earning because I'll rent it out. Okay, but do you know that rental yield is only 3 or 4%? And if your house is not appreciating, are you doing justice to your money? You're not doing justice to your money. So first thing, you need to look at financial assets. When you look at financial assets, let's say there are debt and equity. Now, in the debt, you also have fixed deposit, and you also have debt instruments like non-convertible debentures, you must have heard, bonds, and the debt funds or mutual funds. So mutual fund is not the only option, there are other options. The reason why I said mutual fund is because you have professional fund managers managing your money. Okay. One important thing. Second thing is they diversify your investment. Now, for example, if you are investing, let's say 1,000 rupees in an equity fund, your money is being invested into 30, 40 stocks. Imagine if you're doing yourself, investing in the stock yourself. Can you build that kind of portfolio? You can't. So you get diversification. The money gets diversified across different sectors. You have full-time professional managing your money. That's the reason why I recommended that you should be looking at mutual funds. You have a lot of flexibility. There is tax efficiency in that. For example, if you invest in equity, if you sell with your stocks within 1 year, you end up paying 15% tax. Whereas when you invest in the mutual fund, the fund manager can make changes. You're not doing anything, you're not paying any tax on that, right? You pay tax only when you withdraw the money. So I think these are aspects that you need to look at.
Lata, coming back to you, anything, what else is on your mind?
The question is not from my own perspective. I'm asking from a common man, a perspective of a common man. For example, my father, he has a saving account in some bank, and he earns, like, suppose he earns 20 to 30,000 a month, and he only thinks about the savings. For example, saving in gold, investing in gold, and that's it.
Right.
As far as I have known, that's it.
Right.
Gold is the only thing, because they are uneducated, right? So if you want to tell the common people about it, if you want to invest in something, we have money, but how to use it? Right now I don't earn, I can't ask this question, but from their perspective, I think I should.
The reason why people are investing in saving bank is, one, they may not be financially aware of what are the other options. The second is their perception of risk. Okay, it's like my hard-earned money, I should not lose that. The bank is supposed to be the safest place, I go and put my money there. We forget one thing, the saving bank is giving me only 4%. And I did mention about inflation. So if the costs are going up by 7%, okay, so you see what is happening? Your 1 lakh after a year is becoming 1,04,000. And anything that you wanted to buy for that 1 lakh 1 year ago, now it will cost you 1,07,000. See what has happened? Your money has grown in numbers, but the value of your money has gone down. So I think this is something that needs to be explained to anyone who refuses to look beyond bank deposit, that there is something called inflation, which is a far bigger risk. And I haven't seen anyone, I mean, if you invest in a disciplined manner, even in the markets or through mutual fund and equity funds over a longer period, that you lose money. In fact, the returns are much, much better. So I think we need to understand how you perceive the risk, okay, and what the reality is. There is a gap in that. And I think once people understand that I need to beat inflation, they start looking beyond fixed deposit.
Hemant, we're just about running out of time, but before we let them go, before I let you go, 3-4 pointers that they should remember to get on the right path for a financially secure future.
One, I would say that, don't think that it's too early to start thinking about investing or whatever, right? As I mentioned to you earlier, as soon as you start earning, thinking about saving and investment. Focus on your risk management. Do not ignore that aspect. It's very, very important. 3, look beyond your comfort level of investing in gold and traditional options. And like I said at the beginning, there are certain things we need to unlearn. Okay, because in the family we learn certain things, and we need to understand today the world of finance is very different, and today the requirements are very different, our lifestyles are very, very different, right? So we need to understand that what is best for me.
So thank you so much, Lata. Thank you so much, Caroline, for coming in. And thank you so much, Hemant, for taking out time and coming here. Thank you so much for watching. You've been watching NSE Prosperous India, a very special investor education initiative by the National Stock Exchange of India and Times Network. Thank you so much. We'll see you next time.
I always thought that, the moment you get your money in, you're supposed to put it in a fixed deposit, and that was the way to go. But I figured the guest actually made a lot of sense by saying that it's not really advisable to go in for fixed deposits, and mutual funds and investments are quite more feasible than considered fixed deposits. And also also to get into the discipline of, you know, actually trying to start saving.
During this session, thus Hemant sir, who's an expert of this financial matters, he has asked us to focus more on investment, and it's very important in this era of time, as the needs and the expenses are getting higher, and the inflation is going up. So I think investments, as sir said, and I think each and every student should learn about it, that investment is much more important than savings.
Partnered by Times Influence.